Hi, I'm Mark Stelter, Director of Community Association Lending here at Itasca Bank Trust Company. Even after 20 years, I wake up every day with the same goal, to make maintaining properties as stress-free as possible for property managers and board members of any size association. So whether you're a manager, board member, unit owner, vendor, or just someone curious about life inside a community association, join me as I sit down with guests from the field. Welcome to Community Association Insights. Let's get into it. Welcome back to another episode of Community Association Insights. My name is Mark Stelter. I am the Director of Community Association Lending for Itasca Bank Trust Company. I have with me an incredibly talented group. We've expanded to 3 guests today. We're going to be talking about what it is like to get a common element repair loan, how to get one, what to look for, the process, the procedures, all the pitfalls. You'll enjoy this if you're a board member or a property manager and you're contemplating undertaking some major common element repairs and you're not sure how to pay for it. I've assembled a terrific group that's going to help walk us through that. So we'll start over here to my right with Bob Prince. Bob is a partner at Cervantes, Chat and Prince out of both Chicago and Burr Ridge. Bob is a graduate of Valpo, so that's why I put him on my right, because that's a favorite school of mine. And over here in the corner, I have Sam Segvich, who is the founder and owner of Delaware Realty Group, located down in the Loop, founded in 1988.
Correct.
So certainly Sam has built up a lot of experience over the years. And then finally, across from me, Dave Conforti. Dave is with Real Manage. Real Manage has offices, I think, pretty much throughout the Midwest and South and Southeast and all over the place, but locally here, Schaumburg, Carroll Stream.
Yes.
And a Redbird from Illinois State,
correct.
where my daughter went. So welcome to everybody.
Thank you.
I've given just a little bit about each of you, but maybe we can go in a little bit deeper, and we'll start with Bob.
Sure. Bob Prince. I'm a principal at Cervantes, Chat and Prince. We are a property law firm and business law firm. I concentrate my practice in representing condos and homeowners associations. And very timely for this is I actually represent banks who give loans to associations as well. We started our firm in 2015, and we basically, for an association, we can do everything for you from soup to nuts, from A to Z, whatever it is, whether it's a tax appeal, collections. We can handle it all. I love it. I'm a local guy. I came from Bolingbrook. I live in Bolingbrook to this day. I like it. I hated property in law school, believe it or not. But when I came out and this was the option for a job in 2009, I was in. And Excellent. I've loved it ever since.
And an active member of CAI, former board member, current committee member?
That's correct. I had 2 terms on the board. I think I ended in 2022.
Okay, very good. Thanks. Sam?
Again, my name is Sam Segvich. I founded Delaware Realty Group. Prior to forming Delaware Realty Group, I'm also a CPA. I started off in public accounting for many years, auditing large corporations, and then I moved to a company by the name of JMB Realty, where I was an asset manager with them, responsible for buildings like the Chicago Mercantile Exchange, 900 North Michigan Avenue, shopping centers, office buildings. And then I decided to start my own company because I felt I could provide value to these associations. So again, I've been in business for quite a long time. I've completed a substantial number of roof renovations, masonry restorations, pavement restorations, sewer systems, and so on and so forth that have all required loans. And I work with architects and engineers to make sure we get the appropriate bids, and I work with banks to get the best loans.
Excellent. Dave.
Hi, I'm Dave Conforti. I was a probation officer for 17 years, and about 10 years ago I decided to switch gears. Took a job with Caruso Management Group out of Naperville. Fortunately enough, Marcia sold the company to Real Manage in 2015, where I've been since. Started as an assistant manager, worked myself up to property manager. Currently have my AMS and working on my PCAM. My current title is Director of Client Services and Transitions and Training.
Wow. Yeah, we were talking about the PCAM and how challenging it is to get that designation. PCAM is just one of the designations you can get through CAI. CAI, as I've mentioned before, is a national organization, local chapters in every state, and they do offer training and certifications for property managers. I don't think I can give enough commercials for CAI throughout each of these podcasts, but if you are a board member for an association, regardless of the size, whether you're self-managed or professionally managed, I strongly encourage you to look into CAI. The website is cai-illinois.org. Talk to Cheryl Murphy, learn about it, and consider joining. It's a great organization to join. So today we're talking about common element repair loans, and basically starting from the beginning in terms of what it is, how to apply for it, what some of the risks are that are involved in it, and things that we should know. So I think we're going to start with Bob and just kind of walk us through what is a common element repair loan.
Sure. So when I think of common element repair loans, we think of the full gamut of what an association could be responsible for. So in a condominium, generally the association is responsible for a few things inside the units, whether it could be pipes and such, but almost everything outside the unit envelope, which is usually a square or rectangular shape. So the association is responsible for everything out there. But outside of condos in like townhome world, oftentimes an association is responsible for exterior surfaces, roofs, and it could be responsible for siding. If they have a clubhouse, could be responsible for a clubhouse to take care of, common areas, ponds. Those are the gamut that we talk about when we talk about common elements. It could basically anything that the association could be responsible for, and in some cases it's opted to be responsible for. In some declarations they're allowed to say, hey, we're going to do this work even though it should be an owner's responsibility generally. And
so would that be the limited common element?
Often it's a limited common element, and in some townhome or HOA declarations, if the HOA takes care of some exterior things, the association can opt in to taking care of a certain portion of the property. They should do that in advance, do it in writing, to make sure that we have a good paper trail of why we're doing it, because the bank's going to ask why we're doing it if we're not supposed to be responsible for it.
So if I'm a board member and we have a major project that we're about to undertake, or I'm just curious about, maybe I'm a new board member and I want to know what am I responsible for as a board member in terms of these repairs, I'm going to go to my governing documents and it's going to be described there?
It should be described there. Sometimes their documents are better than others.
Depending on the age of the declaration?
Exactly. If it's the 30-year-old declaration, we might need a little bit more, we need to fill the gaps somewhat. But the answer should be in the declaration or in the state law. If there's a question about it, ask an attorney. I'm not trying to plug attorneys here. But if you ask your attorney, they should be able to tell you with a pretty good certainty whether something should be the board's responsibility, whether it's not the board's responsibility, or whether the board can opt into being responsible for it.
Yeah, I don't think we can plug talking to the attorneys enough, because if there's ever a question, especially as a board member, and we've talked about this, we had Carrie Bartel and Dave Bloomberg on, and they gave us a very good perspective from the legal side of association living, and then we talked to Simon Fox and Carrie Surratt. I just drew a blank on Carrie's name. I'm sorry, Carrie, and I've known Carrie forever, but Carrie Surratt with Associa. And, we kind of walked through each of the parts of why it's important to always utilize the advice of your attorney, because if you're making a decision as a board member and you haven't sought out legal counsel and there's any question in terms of responsibility or liability, I think it's always best just to at least make a phone call, send an email.
Yeah, it could be very quick, could be a matter of 2 minutes. If it's something that's very complicated, it could take a half hour to an hour at the most. We're not talking about rocket science. If you want something in writing, it might take a little bit longer, because we're going to give you an opinion that hopefully is very detailed, that describes all the possibilities, so that protects the association should someone challenge it later.
Okay, good. So we're talking in order, state statutes, and then your declaration or your governing document for the association that you're in terms of the order of importance.
Absolutely. State statutes generally trump, unless it says your declaration can modify the statute's provisions, and then the declaration is usually where we find most of our answers.
Okay, excellent. So the next, and we keep going back to Bob in the beginning, but I promise you we'll get Sam and Dave involved here. But the next question that we tend to think about with regard to a common element repair loan is, do I as a board have the authority to even go out and obtain this loan? And what, besides just my governing documents with with condominiums, the Condominium Property Act, and my governing declaration, what gives me the authority to go out and get that loan? Do I need unit owner approval? Do I need somebody else that's going to tell me that it's okay to do this?
It's going to be a good lawyer answer for this one. It's a depends answer.
Okay.
If you're at a condo, the association has the inherent right to take out the loan. The Condo Act was amended 5 or 6 years ago, I believe, to make it so that it does not require 2/3 approval to take the loan out. For a common interest association, so we're talking about townhomes, homeowners associations, master associations, the answer is going to be found in your governing documents if there's any restrictions on the ability of the association to borrow. The Not-for-Profit Act says it's one of the powers of the corporation is to borrow money, but the documents can limit those powers in some way. So the authority for a condo is blanket, yes, to be able to take the loan out. Non-condos, we need to find something that says, make sure that something doesn't say no, that you can't do it. And that's different from the assessment. Usually for the loan, you have no restriction on it, but there could be some restrictions on whether or not the paying back the loan has to be approved in some way, shape, or form by the membership.
Okay. So, Sam, tell me, what are the most common reasons that you see for a board to get a common element repair loan? What are they repairing the most in our terrific four-season climate in Chicago?
That's a very good question. It's the building envelope, which basically consists of the roof or the exterior walls. And in some cases, it's the windows, too, depending on who's responsible for the windows. Again, the declaration and bylaws would explain all that. But brick is very porous. People don't realize that. And mortar joints can fail over time, and water can pour into a building through mortar joints. In addition, some buildings are made with limestone, which is very strong, but in some cases they have Renaissance stone, which is fabricated in Canada. Basically, it's compressed concrete to look like limestone. And then you have concrete block, which is highly absorbent and will cause substantial damage to the inside of homes if it's not properly sealed on a regular basis. The roofs need to have, the roofs are either a low slope roof, which is also called a flat roof, or a shingle roof. And a shingle roof, could last 25 to 50 years depending on the type of shingle. Mm-hmm. But you also have to figure out what's beneath the shingle, because if you don't have, you might have heard the term tar paper. I've seen situations where developers put shingles right on top of plywood. That was obviously an accident waiting to happen. So at a minimum, there's tar paper. But in the best application, there's ice and water shield, which is it's belt and suspenders. The shingles then just become dressing on top of ice and water shield. But the point is, you want to stop water from the sky. And as I mentioned earlier regarding limestone, you have walls sometimes that have limestone caps. Water will enter through the caps. It's open to the sky, basically. So the building envelope is extremely important. And with some upfront work early on, you could save hundreds of thousands of dollars if you address things early on.
Yeah, the preventative medicine.
Correct.
Yeah.
Preventative, that's right. And it's best to have an architect involved or an engineer that can kind of scope out the situation. I'm constantly walking up to mortar joints with a key. If the mortar joint scrapes away very easily, it's too soft, and it will be prone to failure. If developers put buildings up in the wintertime, the mortar might shrink. You get a hairline crack. You don't think anything of it until water's flying on it. Again, you can build a building to withstand water. You just can't afford that.
Sure.
Just think of a fire hose against a wall. Eventually, the water is going to get in.
Yep.
You have chimneys. They have to be properly flashed. So there's a lot of areas for water to get in, and an architect can clearly help you on that.
Any other common elements that you've seen being repaired, Dave?
Driveways, concrete, like Sam indicated, and I would just want to add that that's why it's key to have a reserve study done by your engineer so that we can get a report on the findings of the condition of the buildings at that time and plan for the future as far as how we're going to fund those projects.
Yeah, and we've talked about reserve studies in the past in some of the other episodes, and the reserve study is really going to be a report put together by an architectural or engineering firm that's going to go through your governing documents. It's going to identify, like Bob was talking about, it's going to identify what are you responsible for as a board to make the repair or replacements for, and they're going to provide you with an estimation of the useful life of those. So it could be siding, could be shingles, could be your elevator, could be, like you said, the concrete around or on the building, and it just gives the board kind of a timeline of how much should be reserving, how much should we be reserving as a board in order to have the funds necessary to make those repairs. And if that's not possible, then we seek out the common element repair loan because we have a repair project that's going to cost X, we have Y in our reserve funds, and the difference is going to be made up through either a special assessment where everybody writes a check all at once, which is not usually very popular by the unit owners, or we go out and get a loan and we make those payments over time. So now, okay, we have the board, we know what we want to do in terms of our repair, we know that we're going to need to go out and get the loan, but that loan is going to be paid for by a special assessment that's going to be created by the board, the special assessment being in addition to the operating assessment. So in other words, you pay your operating assessment every month as the budget gets passed every year, and then the special assessment comes along for the specific purpose of creating cash flow necessary to make the loan payments. Talk to me, Sam, a little bit about the importance of communicating with unit owners along the way as the board's discussing a special assessment.
Well, that's very important because it will clearly, you want to be as open as you can with individuals because unfortunately a lot of people are very busy. That's why they buy a condominium. And so a board has to really go out of their way to communicate to people. I've even installed plastic memo holders in garages. Just we put them on car windows in some cases. We want people to know what's going on. And because sometimes people are scared about the term special assessment or a loan. And if you have the appropriate budget preparation process, it doesn't have to be scary.
Right.
You build it into the budget, and then you communicate that to buyers and to sellers and to realtors, because there's nothing worse than having a skeleton hiding in the closet somewhere that nobody knows about, even though they have $2 million in reserves.
Right.
So.
Right.
I'm constantly trying to back up my boards by telling people they're being very proactive.
Right.
There could be a larger reserve balance, but they instead decided to fund this project. So you must keep people informed.
And I'm assuming at Real Manage, you probably have websites for the properties for I don't know, all or many of them.
Yeah, our company software, we have a system that sends e-blasts out and updates like
So you're
community
communicating
resident
with
announcements
with
daily.
the unit owners that way.
It's still, difficult sometimes to get people to buy in or to read our mail. I recently had a loan passed and barely any owners showed up to the 4 or 5 meetings that we had, but when they got the notice and the bill, then they were all calling, up in arms kind of about disputing this amount, at which time then I had to discuss with them and give them the information and advise them that, hey, all these mailings were sent last year,
Right.
To inform you guys. We'll be happy to answer any questions, but at this point, the special assessment's in place and it's your obligation.
And it doesn't happen in a 30-day period, right? I mean, this is a process
6 months,
that
I think.
takes quite a bit of time.
Yeah, it took about 6
So
months.
I'm always amazed at, and you're right, people are busy, and they moved into a community association, maybe under the guise of, stress-free, maintenance-free living or something along those lines. All I have to do is write my assessment check. But it is a fact of living in a community association that prior boards may not have reserved enough money, and now we have to make the repair and we have to get the money from somewhere, and the special assessment is the primary way that the loan's going to get repaid. At what point are we, and we kind of talked a little bit about this with Carrie and Dave, at what point does the 22.1 disclosure come into effect with a board talking about, hey, we're going to need to pass a special assessment?
So the 22.1 disclosure is just it's a requirement if a seller is asked by the buyer to get a disclosure statement from the association that says what the certain conditions are of the association, like reserve amount, whether we have any projects that are out there, whether there's any litigation. So the project portion that's out there, it's important. It doesn't talk about special assessments at all. All it talks about is what are the projects we have for this current fiscal year, and what are any capital projects we anticipate in the next 2 fiscal years. So in those cases, we take a very conservative approach and say, if you have talked about it at the meeting, obviously, there's discussion about a project happening in the next 2 years if you're talking about doing a project next year. It may not appear in the minutes yet, but the fact that you're talking about obtaining bids, you should be disclosing the fact that a project might exist. You might not know anything about it, how much it's going to cost, when it will be, how you're going to pay for it, but you have to disclose the fact that we have a project out there. And that gives the buyer the information of, hey, there's something here, do I think they have enough money in their reserve account to pay for it? And if they buy willingly on that, they've chosen that course. If they don't choose to buy it, then it's unfortunate for the seller, but that's the approach we take to make sure our associations aren't getting sued to avoid the special assessment that's being applied because we're doing that project.
And is that what you're seeing with the 22.1? Because I'm assuming that you're probably the first line of disclosing that, right? For the
Correct.
board, you're guiding the board on that?
Correct. We're responsible at our firm to update those 22.1 questions on a monthly basis. So we inspect the records, we kind of know what's going on with the financials, and then we update it accordingly.
Okay. Did you see the same thing?
You know, I have to sign them, which means I'm liable.
And you're licensed.
Right.
So you're signing based on...
And, you know, we are licensed. The 22.1 is an extremely important document. And people might say, as you know, the questions in the Illinois Condominium Act are like, I think, 7.
Yeah.
But for some reason, I get 20 questions on average. You know, lawyers keep adding on, which is fine. I want them to be fully informed. But you're right. If they've mentioned the term special assessment at a board meeting, I have to disclose that. Or if I think they're going to replace a roof in a couple years, I cannot ignore that. And sometimes people get very upset. And while they might not sue people, they might find other ways to criticize buildings, managers, and a board,
Right.
especially when the person now becomes an owner. So the 22.1 is extremely important. And that's why I believe that a detailed budget should include a lot of that information, those answers. So when we give them our 40-page budget, we say, please refer to the budget. And then if you have more questions, contact us. But
Okay,
it's
good.
extremely important.
Yeah. And the 22.1 is just the reference within the statute, correct?
Correct. That's the section of the
Section
statute, the Condo Act
of
that says
the,
it.
Okay.
There's a similar one in Common Interest Act and in Section 18.5 that governed non-condos. But that's the reference to the section. It's the one everybody uses. And unfortunately, they'll use it for non-condos. The attorneys will send you the same form. Give me a 22.1 on these terms. And it's technically not, but we all know what they're talking
Right,
about.
I know.
All right. Okay, so I'm a board member. I know I need to make a repair. I know that I've got my governing documents that tells me what I'm responsible for as a board member. I know I don't have the funds in my reserve, and so now I need to go out and get a loan. And then the question becomes, who makes these types of loans? And so, you know, clearly Itasca Bank and Trust Company makes these loans because that's really why we're here, is to talk about all things related to community association life. And this will be my next plug for CAI because, like with property managers, with attorneys, as every aspect within community association living, there are multiple contractors or professional firms that offer services. And so Itasca Bank and Trust Company, we offer common element repair loans. We offer fixed rates up to 10 years. We don't have any prepayment penalties. We work with 50 different management firms throughout the area. We've been making these loans for 20 years. I was kind of counting up with the team that I work with, and we figured out we're just crossing over 1,000 loans that we've made in the last 20 years We have 400 active loans as of today. So, we're very experienced. So I say all that to tell you that the managers are going to say, regardless of whether it's a roof, siding, paving, elevator, pool, you have to go out and get multiple bids, right?
Correct, as far as the loan goes, as well as the contractor's proposals, yes.
Okay, how many bids are we typically, as a board, looking for?
If I'm looking at a capital project, that we're talking, $750,000 or more, I'm going to push to get 5 proposals at the very least. Anything smaller, sometimes 3 will suffice. It, depends on the scope of the work,
right,
as well as the board's input.
Yeah, and it could be the size of the association, could be the size of the loan.
Exactly.
Some banks are a little more interested than others. Some of the competitors that I have that are larger like to move further up the dollar amount scale. What are some of the differences that you've seen over the years with the different lenders in terms of maybe requirements or terms and conditions? Is there anything that sticks out, or do they all kind of blend in with each other?
No, they don't blend in. What sticks out would be prepayment penalties. Not having a prepayment penalty is obviously a huge advantage.
Especially in a rate environment that could change,
Right.
rather quickly.
Right. I have refinanced numerous loans that had no prepayment penalties. But if they have a prepayment penalty, well, now we're stuck, sort of. We have to wait and see until the prepayment penalty percentage drops to a point where it makes sense. So I will put together schedules and analysis to show my client, well, now is the time.
Right.
Now you can...
You're saving enough money if
Right.
you refinance, you'll make up the cost.
Right, but, the documents are pretty much the same from all the banks, but it's also the relationship with the bankers, because some bankers may not fully understand the whole process, and they're not comfortable with it, which then results in additional people being involved, which then delays it.
Right.
And in some cases, my clients can never sign a contract for a large project if they are waiting on the funding.
Right.
So you're in a holding pattern. And, last year and the early part of this year, projects were increasing 10, 15, 25% because of inflation.
Yep.
And other costs.
Yep.
So I could not be in a situation where I had to wait. So it's extremely important, and I'm not going to lie that dealing with Itasca Bank has made my life a lot easier, and also for my clients. And we get projects done, we get projects started faster, because now I have the homeowners asking us, I thought you told us this is going to start. Well, the bank, not you, are still talking to other individuals in the bank, and it's a large bank and with numerous offices, and so on and so forth.
Yeah,
So,
and it is a specialized type of lending. And there's
Clearly.
a lot of niches that different lenders have, just throughout, whether it's construction or, residential or commercial buildings or C&I type loans where they're doing equipment, and lending to community associations is not something that every bank does. And it's just something that, and again, I'll point back to CAI, because CAI, you can look right online at their website and see not just for lenders but for different professional services and contractors who's comfortable in the industry and who can work with. And they're pretty much all attorney-prepared documents, right, for the loans?
For the banks that do have practice or have groups that do association lending, they're almost all prepared documents by an attorney, in large part because you're going to deal with an attorney on the other side. It's not the Doc Pro, just send it through like the normal banks that you see, the big banks, when you see them out there that always want to have it on Laser Pro.
Right.
Just same document no matter what. There will be some changes that are asked for traditionally, whether it's changing a few words to make it a little more reasonable, to make sure the terms reasonable are there. But they're usually attorney-prepared documents on the bank side, attorney-reviewed documents on the association
Yeah,
side.
much easier to make changes, and from declaration to declaration or the governing documents, you could see some pretty significant changes in those governing documents. And while we're talking about that, maybe we can touch on the fact that there are still declarations out there that have restrictions about either getting a loan or needing approval. Does that get overridden by the state statutes? Where, as a board member, am I going to be concerned about my right to get this loan without again, the restrictions that might be contained in a very old declaration?
So the older declarations were for condos, it doesn't matter on obtaining the loan itself. Again, it's just the paying it back through a special assessment that could be a problem for the membership might have the right to unwind what the board did. They might have a right, I call it a veto. They have a right to potentially veto the assessment increase. For non-condos, there are those provisions that still could be in a declaration and articles of incorporation that would say you cannot get a loan absent getting approval from blank number of people in the association. That's usually 2/3 is what we see. Sometimes it's just a simple majority, but it's usually the number is 2/3. So to get that, you're purely looking at the declaration of bylaws and the articles to determine the board's ability to take the loan out. But the membership could be, as we said, part of the process if it's an assessment increase over 15%. Generally, for getting a loan, it is, right? Because we're not talking about small amounts of numbers. It's a lot of money usually. So we're almost always going to be in that 15% category. And if there is an assessment increase over 15% over last year's for all assessments this year, the membership has a right to try to veto that. To do that, 20% of them have to sign a petition that says we would like to challenge this assessment. They have to submit that within 21 days of the day we make the action. So unfortunately, for the ones who don't show up at the meeting, they never know when we did the action is actually done.
Right. And the board's not going to parade down the sidewalk and say, "Hey, everybody, you have the right to petition us to." I mean, it's just it's buyer beware. You need to be aware of it.
Generally not, and I've never seen one actually successfully challenged. I saw one get within 1 or 2 votes of getting challenged. It's a condo, so it's percentage, so you never know.
Right.
But it was within 1 or 2 votes of successfully challenged at a meeting. But that veto right. That only works if a majority of them attend a meeting and vote against the assessment increase. So basically it's saying we need half of the association to be there in person or by proxy to say we don't want this assessment increase, which is, it's very difficult to get that amount.
Okay.
But that veto doesn't even come into play if we're talking about something that's an emergency or if it's like related to an ordinance violation of some sort. So let's say that the municipality is coming at us for balconies that are not in conformance and we have to rip them all out and put new balconies in. It would be terrible if the membership could say you can't spend the money to do that because we would just be fined into oblivion. So it makes it so that if there are emergencies or if it's mandated by law, there is no owner approval ever required.
And so when we'll put up on the screen what the items are on a typical checklist that a lender might require from the board. But let's do a plug for the managers here. We were kind of talking about it yesterday as far as self-managed versus professionally managed. Maybe talk to us a little bit about what are the advantages of having a professional manager when you're walking into the dark hallway of getting a loan or making a repair versus maybe some of the self-managed associations you've seen come into real management.
Yeah, I think it's essential, if you have a property manager, that we have those business partner relationships that we've facilitated over the years, several partner vendors that can help us provide the information and maybe even provide the specs for the scope of the job. And then also the banks. I mean, it's important to use, like you said, banks that specialize in association banking because they know the ins and outs better than we do as a manager. And it's really important for us as a manager to know all the right people. Like I use Bob's firm all the time. I mean, knowing the right people is a big help, and sometimes the board of directors, they're volunteers.
Right.
So they may not have all the time to go out and do that legwork. So that's where we come in to help.
Yeah, those relationships are huge because whether it's a roofing contractor, whether it's an asphalt contractor or siding, what they did on the prior projects that you've worked on, and who to go with and maybe who to kind of stay away from and guide the board on that.
Sure. Plus, we have so many other coworkers and managers that have done the same work and been through the same project. So it's just a wealth of knowledge to be able to go to those people and ask for assistance, or maybe there's a project I haven't worked on, so I go to my neighbor's desk and I ask them, like, hey, have you ever worked with anyone that replaced an entire fire alarm system, because that's a huge expense. So yeah, it's important.
Yeah, that's an excellent point as far as having the resources. And then from the number side, being the CPA, I'm sure you've seen some incredibly creative accounting from associations that come to you for the first time and you're looking over their statements. I've received received your statements many times in the past, and they are just the level of detail that you provide is impressive. So what are you seeing out there in terms of how some of the associations are maybe accounting for their numbers, their income statements and balance sheets?
As a CPA, I believe in very detailed accounting and financial statements and also budgets. These are the same budgets I developed when I was responsible, again, for large corporate assets in the city, a few $1 billion worth. And I attempted to bring that down to a level of condominium associations and homeowner associations, because I didn't feel a simple 2-page budget was adequate.
Right.
In fact, it provides no information at all. All right, and I just could not believe I was seeing that 35 years ago, and I still see that today, actually. So I develop budgets that are very detailed. I try to go out 10 years. I'm trying to show my client, this loan, as an example, will be paid off in 10 years, as an example. So you can lower assessments or maybe fund your reserve. I'm telling that to buyers also. So when I prepare budgets, I can prepare 3, 4, 5 variations of a budget for a board. Do you want a loan? Do you want no loan? Do you want a combination of special and loan? What do you want? I will help you put that together, and then you can make the decision. And then when you communicate that to the homeowners, you can say, we looked at all these different options, and this is the best option. And when I give the budget to bankers, as you mentioned, it's extremely detailed because I'm trying to think of everything. I've been in your shoes before, and I know what it's like because you have to analyze this. You have to make sure they can actually pay this loan, and they can fund the reserve, and they can meet all of your ratios. So I have to go out 10 years with calculations that show me and you, we've met your ratios. Mm-hmm. I'm done then. I am literally done, and it's your job. So, but with a 2-page budget or a 3-page budget, our budgets have narratives, they explain things. It makes it easier for the banker and also for the homeowner to understand. I can't tell you how many loans I've entered or special assessments I've had to put in budgets, and in many cases, not one person ever contacted us. We have a budget right now that you're working on. Out of 105 owners, not one person has contacted us because it's all there. I can't do anymore. Right. And because that's my job, is to make it as informative as possible. Right. And yes, you have to have more than just 2 pieces of paper. Okay.
Yeah. And it's a testament to the fact that there's that much detail contained within the budget process.
Right. And I just want to make 2 other comments from earlier. One is regarding the decks and bylaws and a loan. Sometimes it doesn't discuss a loan, but it discusses the length of a contract.
Right.
And that's where that's where you can get caught.
Especially in the older declarations.
Right, where you can't go beyond 4 years or 5
3
years.
Yep.
Okay. And then the other thing is, while a bank will lend us the money, there's another piece to this. It's funding the capital improvement expenditures. And so when I receive, in many cases, there's an architect or engineer, but when I receive the pay request that goes to the board, they approve it, it then goes to you. And it's all there for him. So as an example with you and your bank, you prepare a check, it's overnighted to me the next day. Or you've even had the check sitting at the drive-up for contractors who are really antsy. They're happy. They've gotten paid. They continue to work. Yep. Everyone's happy.
Payroll's on Friday.
That's an important point. You cannot get that with a larger bank.
Right. No, that's true. And we I could talk a lot about what I think the advantages of Itasca Bank are, but I have amazing competitors in the industry that I respect dearly, and I can't do all of their loans, and I don't want to do all of their loans. So everybody kind of finds a nice niche within the industry. Is there I believe there within the Condo Act, once a association crosses over, is it 100 units, they have to change the accounting to GAAP?
Yeah, so it's generally accepted accounting principles, which when I talk to accountants, they tell me that means GAAP. And it usually means a compilation, technically on the end of the year financials type things.
And not to get too deep into different accounting measures, but there's cash basis accounting and then there's accrual basis, and both of those are easily looked up on the internet. But
there's a third. There's a third. There's modified accrual.
Okay.
And that's what most of us would use is modified accrual. Cash, we all know what cash is. We all know what accrual means. You're accruing for insurance expense,
For a
even
bill
though
that's not yet
other
due,
thing,
but
right?
you're accruing
right.
for it.
The modified accrual is in the middle. It kind of, we can't. Look, this is not a Fortune 500 corporation. It's still a condominium association. I need to produce accurate financials, but it would be not necessary to produce all accrual, for instance.
Right.
It's modified accrual.
Okay. So now we've gotten this far where we've applied for the loan, and oh, by the way, Dave, we're gonna take on this major roof repair project, and you're gonna handle the whole thing, right? And is it fair for a board to expect a management firm to oversee the project and not, or yes or no, pay some additional fees for that? Talk a little bit about the contracts and what's in it and what's not.
Sure. So, yes, it's common for boards or associations to have to pay the management company if they wish for us to project manage, which, sometimes they're willing to do and sometimes they aren't. With
Because that goes beyond just the normal day-to-day management, right?
Correct. It's a lot of administrative work as well as inspection time. If an association that we manage chooses one of our partner vendors, there's no additional billing to that association. Our firm gets paid through the actual contractor. If they decide to use a partner or a non-partner vendor, I apologize for that slip up there. If they decide to use a non-partner vendor, then yes, the manager is required to charge for their additional time as going out there to inspect the project or doing any administrative paperwork to keep the board up to date, on a weekly basis.
Okay. When you're dealing with the board and overseeing the project, you're talking to probably multiple contractors, sometimes on a daily basis, maybe weekly, but you're reporting back to the board on a monthly basis, right?
Yeah, at the very minimum. Sometimes it's one contractor. A lot of times they're general contractors that we facilitate all the discussion and communication with.
And then they're coordinating with the subcontractors?
Correct.
Okay.
And then we take that information, it's real useful to create Excel spreadsheets, based on like what building had what done and the dates that maybe we're looking at, so that we also can keep the ownership, notified as to when vendors are going to be on the property. They don't like to have vendors out on their roofs if they're not aware of it.
Yeah, that's a good point. Notifying the unit owners that you're going to have contractors out on the property.
And sometimes the vendors will take it, that'll be part of their scope, that they'll go and put notices up like the week before that they do that next building.
Right.
And sometimes it's on us to get the proper notices out. And we like to overkill. We'll send a mailing, we'll send an e-blast, and we'll also post on garage doors.
Okay. And you're the contractors are looking to get paid through anyways, right? Because I know that when we get our pay requests, they generally come from the manager.
Correct.
Who's coordinating with the contractor.
Correct.
And then making sure that lien waivers are being collected or that the work is being completed. So really they're looking to you on both ends, both from the contractor to say, hey, can I get paid? And the board to be able to get their approval.
Right. Because normally, in many projects, the goal here is to save our clients money and complete the project properly with long-term warranties. And usually, even on a small project, there should be another professional involved. There's definitely a lawyer involved, and there more than likely is an architect or an engineer. Because my point is that the architects and the engineers prepare the specifications, which are extremely detailed and thorough. We get apples to apples bids. Every transaction's arm's length. So I have some contractors I've worked with over the years, the same ones our architects and engineers would probably recommend anyway. But I'm just saying, you have them bid, but normally there's anywhere from 3 to 6 contractors bidding on a project, and they have to be properly vetted or they can't bid. So I'm not really the one vetting them. It's the architect or engineer that's vetting them because he or she wants to make sure this project is going to get done properly.
Right.
And so, we're constantly communicating with people, the homeowners and such, but, our job is to be a sort of a coordinator. We wrap our arms around everybody, and I report to the board. So I'm constantly reporting to the board daily, weekly. I'm calling them, I'm texting them, I'm on site, I'm on a roof, I'm taking pictures.
Right.
I want people to have this warm, fuzzy feeling everything is going well.
Right.
But at the end of the day, the architect or engineer are technically responsible for approving the pay requests, which then the board approves. Then they give it to me. I don't approve anything, and then I give it to you.
Right.
But, again, the lawyers have to prepare the documents. Everybody's happy then. Everybody's involved, and the goal is to save money and get a warranty.
Yeah.
And then I move on to the next project. I don't worry about this one anymore.
And your analogy as far as getting your arms around the project, I mean, that's really the entire industry. The whole industry revolves around the managers. And I always tell the board members that. It's the managers that bring Bob in or me in or the contractor in. Those are the ones that are going to make the entire process happen.
And as he mentioned earlier, you're right. It's a separate issue. A management contract is the day-to-day activities, window washing, snow plowing, carpet cleaning, you name it. But then there's the capital improvement. I mean, we cannot be brought in to rebuild a whole building.
Right.
That would be, extremely time-consuming. And if anybody says, "Oh, no big deal, we'll do it," I would question them, because then they're not properly going through all the appropriate steps.
So it shouldn't be a shock if the managing agent comes back to the board and says, "Look, I'm more than willing to oversee the project, but there is going to be a fee for it." I would not recommend, stepping over $1 to pick up a dime, so to speak, and say, "Well, then you know what? We'll just handle it as a board and we'll oversee it," because that is just inviting trouble. As well intended as the board members might be, there's no substitute for professional management and for the experience they have. So your role early on in the process, where I've seen at board meetings and unit owner meetings, is we got to get the attorney in here, because there seems to be an incredible amount of credibility given to that third-party authority, where you don't have any interest in the project, you don't have any interest in who they choose or what bank they go to, but you are able to speak in a very straightforward, non-emotional way as to why the board has authority and why this is important, including life safety issues if they don't do the work, right?
Absolutely. So as attorneys, we have no political dog in the fight. So that's why I think it's easier for people to understand, and they listen to us maybe a little bit more than their peers on the board, is because in reality, it doesn't matter to me what you do as long as they do it right. So as long as the process is followed, I don't care if you do a special. I don't care if you do a loan. I don't care, how you do I just need you to do the process correctly so that we don't get sued 2 years from now about how we did it.
Right.
So when we do come in, it is not unusual for a board to have us talk to the membership about why we're doing it in the processes and how it's legal. It's invaluable for us as a suit of armor to be able to say, look, I know you might be upset about this. The association's board says they need it. They need this money. This is what the law says. We can do this. We are doing the process appropriately, and that is incredible for people to, after they've vented. Usually people just want to be heard. They want to be able to explain why this is going to affect them. And once they get past that point, the reason kicks in of saying, okay, I understand what you're saying of why we're going about this process.
Right, because with the managers, it tends to be like with parents. They go tone deaf when you tell them.
Exactly.
But then you bring somebody else in and, that makes sense.
That's exactly what I was thinking. Is Bob attends a lot of meetings for one of my boards, every single one actually, and I could tell the story, the board president could tell the story, and they're all up in arms, and the minute Bob says the same exact thing, they're all like, oh yeah, all right, that makes sense. So essential to always have Bob or an attorney there on behalf.
Yeah, I've seen Carrie Bartel take a very emotional room and quiet them down, and they all walked out like, okay, that makes perfect sense. It's like, wait a minute, the manager just told you that, or the board just told you that.
She got that mother tone. I could just everybody like, I understand.
And she controls the entire room.
Well, there's a lot of people, for instance, that don't understand the term flashing.
Sure.
Okay, the lack of flashing creates water infiltration, and a lot of older buildings never had flashing.
Yeah.
But my point is, if you're there as the attorney and the architect or engineer are there, they're explaining all of this. They've already heard it from me, but now you're explaining it, and it becomes crystal clear to them.
They view us as experts. They view us as, I think everybody's an expert in their own field. And for us, they view us as experts on this area of law or this area of things. So I do think it does add. It should be that for all professionals. When the landscaper tells me something is a certain way, I would know unless he told me that. So I think they like relying on professionals and listening to professionals give it, because it makes them feel comfortable with what the board has been saying for a long time.
Correct.
And you'll write the motion right? So that the verbiage is laid out correctly for not only undertaking the project itself, but perhaps passing a special assessment, so that I know some boards are just unsure when it comes to, am I saying the right things?
Absolutely. And unfortunately, most of the time they're making it more complicated than they have to. It literally could be motion to approve a loan with Itasca Bank and the amount of blank, in pursuant to their commitment letter. It could be as simple as that, but often they want us to draft the documents that makes it even easier for them to make sure that they've done everything, dotted their I's and crossed their T's.
And so some of the loan covenants that you'll see in documents from either Itasca Bank or from our competitors, they tend to have similar, for lack of a better word, the hot points of what you as a board need to comply with. Delinquency rates. You have to make sure that you're maintaining the delinquency level, and delinquency generally is a unit owner who is past due more than 60 days on their operating or special assessment. Not talking about work that was done in the unit or legal costs that are being disputed as to who should pay the attorney for the legal fees or fines or anything like that. Is the unit owner making their assessment payments? There's a reserve balance that has to be maintained. Most lenders are going to look for the board to have at least 20% of any recent annual budget. So if the annual budget calls for $100,000 in assessment collections, the lender's going to be looking for about $20,000 or more to be in reserves. And the reason that they want their requirement is the lender doesn't want to have the board come back and pay the attorneys twice.
It's always our fault.
Yes, so it's always your fault. They want the board to be able to handle the minor repairs that come up. And the management company doesn't want to have to go through the whole process again of getting that loan. So delinquencies, reserve balances, we require either professional management, which is, again, just a huge point, or membership in CAI. Because if a board's going to go self-managed, and we talked about this amongst ourselves, some smaller associations just can't justify the expense of professional management. We require that they at least become members of CAI. And you had brought up a good point. I think we both talked about it yesterday. Smaller associations can probably benefit from professional management, even if they don't want to go all in, right?
At least in an accounting aspect to do the books, yes. Being the transition manager, I take in all our new business at Real Manage for a period of at least 60 days through the onboarding process. And the ones that come in that have self-managed have really been difficult for our accounting end to get set up. The books aren't accurate if they're done at all. Returns? Correct.
So they're not in good standing with the state?
I would definitely recommend for anyone that does that. If it's not working, like you said, hire a professional management company because we'll help you out.
Right, you brought up a good point. You can hire us just to do the capital improvement project. So I will come in as the CPA, look at their financials, produce some Excel spreadsheets and documents that will make you happy, and then I will recommend they bring in architects and engineers to bid it, to help prepare specs. We bid it with the goal of saving them money.
Right.
And getting them long-term warranties. And then when everything is done and the architect or engineer gives me the warranties, I give it to the homeowner board, then we're done. They got their project done, the roofs are no longer leaking, mold is no longer an issue, and we move on, unless they want us to come over and take on another project.
They're just taking a huge risk by not using a management company.
Right.
I mean, how I look at it is every step of the way, we want to bring everybody in for the board to interview, starting with the contractors, the lenders, the attorney. Try to have, at the end, when you have those pieces together, we try to have a meeting with all the parties there, with the owners. All the questions get asked before that special gets adopted or a loan gets put in place.
Yeah, no doubt. It's a team effort for sure. So we're going to put up on the screen for you the checklist that we typically look for. But a lender is going to ask for financial statements, income statements, balance sheets. We're going to look for a delinquency report, as we talked about. The association has to be filing a tax return. I don't think there's any exception in the state of Illinois, regardless of the size of the association. They have to be, and that's really one of the I think one of the bigger items we see on a regular basis is associations are not filing their tax returns. So the tax return has to be filed, have to be in good standing with the state of Illinois. That's that CyberDrive website. You can look that up online and see. And then we have to make a decision as to whether or not you're professionally managed or going to be a member of CAI. If they're not filing a tax return currently, how many years do they have to go back? Is there a requirement on that at all? Or can they just we just usually have them file the current year. We're not asking them to go back 20 years.
Well, if you file the current year, the federal government or the state will ask you, what about the ones we don't have? So you'll go.
Are they going to be required then at that point to go?
Now,
okay.
As a CPA, we prepare the tax returns for all our clients, and we don't charge for that. It can be really expensive if you have to bring somebody else in. I'm just trying to help them get everything done. But you're right, regarding the tax returns, they all have to be done. And regarding the Secretary of State, if you've missed it, it's very easy to go online, spend the extra $3
to get back in good standing.
and take care of it. It is very easy to do now via the state's website. It wasn't like that years ago.
Yeah, and it's usually the attorney that's the agent or the management firm for the
registered agent.
Right. What does the registered agent do? What does that mean?
Good question.
Literally, a registered agent is a person who has been appointed by the corporation to accept service of process and notice. So if a lawsuit is filed or a notice it needs to be sent by, like, essentially a government, that person is supposed to be there to accept that service at the address, and it's generally in normal business hours, 9 to 5.
Okay.
They're expected to have their doors open. So when we see board members on there, it's like you may not always be there, and if you're not there enough times when the process server tries, what they do instead of serving you is they publish it to the state of Illinois, and then the state of Illinois sends you something. Perhaps you'll get it after the case has already been heard. Okay. So we advocate at least someone, whether it's the property manager, who's generally going to be open Monday through Friday, 9 to 5, or your attorney, to make sure that there is a body available to accept the service process.
Very clear.
And don't forget, that also includes if a homeowner is being foreclosed on. Because we'll get asked questions in the 22.1 that isn't even available. It's one of the 7 questions, but we'll ask, is anybody in foreclosure? And I don't know the answer to that question, because how would I know that unless we did a survey or a search? So this way, if somebody is in foreclosure, we're going to get served also. Right. And then we know. Until I get served, there is nothing.
Yeah. Good information.
Mark, I have a question. So with the loan process and the requirements that you were discussing, does Itasca Bank require the client to open a savings account and have money in your bank?
Yeah, that's a good.
While they
that's
have
a good
loan?
question, and that that kind of goes back and forth depending on the lender. We don't currently require a reserve account or an operating account to be moved over to our bank as a condition of the loan. Okay. We offer competitive rates like many banks do, and we always enjoy the opportunity to have a more complete relationship both on the loan and the deposit side. Some of my competitors will say it's a requirement of the loan that you have to move your reserve funds over. That can be very tedious and time consuming for the managing agent, for the board members. So we just kind of look at it on a case-by-case basis, and we offer it to the borrower. We don't make it mandatory, and that's, again, one of the things that kind of separates Itasca Bank.
That's a very important point.
Yes.
Extremely important, because I've had other loans where I had to move everything over. It's a very time-consuming process. You have to get signatures and so on and so forth. So that's another point where your bank has made it much easier.
Yeah, I mean, there's really no business out there wants to force a customer to do business with them. There's no sense in making that a requirement. It's not healthy for the relationship. We want you to do business with us. We're not going to force you into that. So anything that jumped out during the conversation that we missed as we kind of wrap this
I would
up?
just point out again, definitely use a property management company so that we could put you in touch with all the right parties, that are sitting here at the table, and so many in the industry.
Yep, excellent points.
Again, thank you very much for inviting me. I found this to be very informative.
Thank you.
Anything we missed?
I mean, I could talk for hours, and everybody knows I would
Days.
do it. So, no, I think we covered a lot of things. It was great. I appreciate you having us here.
Thank you for having us.
So how do people find you? Dave, how can they find you?
My phone number, I'm going to give my cell number. It's 815-260-3855. And my email address is david.conforti, that's CONFORTI, @realmanage.com.
Excellent. Sam?
Sam Segovich. Email address would be office@drgchicago.com. Again, I own Delaware Realty Group. Office@drgchicago.com. Phone number is 312-867-1326.
For me, email is R as in Robert, then Prince, like I'm the son of a king, then it's CCP, so it's Charlie Paul, then the word Chicago.com. My phone number is 630-326-4930, and then just ask to talk to me.
Thanks for leading us through what can be a complicated issue. If you are a board member and you're undertaking a large project and you're not sure how to pay for that, or you want more details, we've got 3 tremendous resources sitting around the table. You can contact any of them. They'll get you in touch with the right parties, and you'll get your project done correctly. Appreciate you tuning in today, and we'll see you next time. Thanks.